Hello everybody, Houston here for another video. I hope you guys are doing well, having a great day or a great night, and let's jump into the charts. Okay, so let's go. Let's measure our retrace since the all-time high. So we had a 90.60% decline so far. Okay, so which is not awful. We had some numbers close to this one in the past in other assets like minus 90, 97, 96, 95, 94. If I'm not wrong, Amazon had 95% decline. So in my humble opinion, the bottom is likely to be close, or we are at the bottom or we are very close. Okay, and remember, this is not financial advice. This is for purpose of study and research. Okay, have this in mind. So the numbers here are well for people who are looking for a bottom to buy or to increase their position. What we can possibly have here, not complete yet. If we take a pattern approach here, for example, one won't fit. So remember what I said before, don't trust the lines in advance, okay? Trust the valid pivots so you won't get wrong in the way, okay? So this is valid, okay? This is correct. And but just for the sake of this bear behavior here, let's extend the line. So what we have here in the bigger picture, we have like something like a falling wedge, okay? And it is also true because if we flip the chart, we have this rising wedge as well. Okay, so we don't have like a neutral scenario with unclear perspective, and this is good news. And about the lines, don't trust extended lines, okay? And I'm going to tell you why. Some things that you guys maybe are aware. Just make clear. Just 1 second, please. Okay. So we have our key level for MoneyGram, that is $1 that we never reached. So we don't have a bearish confluence, but it is possible to see, okay, some action around this level here, and I'm going to tell you why. I am expecting a big drop on stocks, okay? So it is possible, but we still are not sure how this will play out, because it is also possible to see down theory in motion for the stocks, okay? And we just saw here that we have this huge retrace since the all-time high. Okay, so we also saw, MoneyGram behaving against major stocks, okay, like Tesla, Amazon, and etc. So this can be good news, okay, because if, for example, this is what we have for Dow Jones, okay, and what we have for MoneyGram is this. So it's clear that we are having so far this inverted correlation. So it's very significant. We have to watch out, and let's see how this will take place. and it's going to happen soon, okay? So let's take a look on OBV. Well, no divergence so far, not the worst, not the best, okay? And let's take a look in our past, better understand our future, right? So back in the day, in 2008 to May 14, we had this bearish structure here that of course broke bearish. And the interesting thing here that I'm going to show you, it's from a psychological perspective, okay? Just another way to look at the charts. So what we can, how we can look at this bigger picture, okay, in a single chart. We had our high, our first run, and then we had this battle of midway, and now we have this bottom here, right? So we have the three stages of let's say a complete cycle, okay? So again, the high, the midway, and the bottom. Makes sense, right? Because we had all the three stages already, but the last one, our bottom, it looks like and maybe is not ready yet, okay? So let's keep just a second here. I have to measure our 50, our average price since the all-time high. Okay, so the average for now, it's 1831. That's the first level, or maybe the major level that we are looking for once we bounce. Okay, this is for the price average. Of course, we will look for the other levels as well. And an interesting thing here, we can measure from the high to the low, and also it's also valid to measure from 1, okay? And I'm not going to disclose why, but have this in mind. It's a very significant level, and both ways here are correct, okay? Both ways. Okay, so again, the rules for our Fibo placement. We had this valid pivot here, which means the golden is triggered, and likely 90.90 the 49, it's our next level. Just 1 second, please. Okay, sorry. So let's go. So it's trigger, but maybe we can't see it right now, okay? Perhaps we have to see some action below before we can make a new high compared to this guy here, which will give us a price here, our new high, okay? And then the next level we will look to take out is 1831. Okay, so step by step. But for now, you maybe are asking yourself, where is the bottom, or where it's going to be the bottom? So again, if we check the nature of this whole move here, okay, so have this in mind. This structure right here, it's speculative, okay? It's not ready. We can for example, here we have 1 and 1. We would need a 30 point to be to have a clear picture, okay, which we still don't have yet. And so for the lower line, we have 1, we have 2, and we have 3. So there is a thing here about the lines and the confluence. What we are always looking for are far away points, one far away from the other, okay, because this gives us a bigger and clear sight of the whole structure, okay. If you check in the Wikipedias out there about technical analysis, they are going to say this scenario is valid, but this is not the point. The point is when we have a line, let's say for example this is a bottom, okay, we have our touch here, and then we make another one here, and right close to this one another one. This is a sign of weakness, okay. When we retest a previous level in a short time frame, it's very bearish. So it doesn't mean if it's valid or not. That's not the point. In this scenario here, we are looking for a reversal. And so these two guys here close to each other, out of a double bottom scenario, it's not the best picture for us. Okay, so have this in mind. Let's clear here before we moving on. So just let me draw a line here. Okay, so back in the day we had a falling wedge here, but we won't be able to see on the weekly. Take a look later. Okay, so this was the bounce of the partnership with Ripple, because we saw back in the day. And here, as you guys can see, we didn't make a new high compared to the previous one, okay. If we take a measure here, second, yes, 50%. And then interesting that we had the catch on the 50, which was the average since the sell, and right after we got our trigger on 6.24, which is good, but I mean it's good for later continuation, okay. It's like a mark for the bulls, okay. They made their point here even despite the rejection, okay. We are looking for a later perspective clues here on this scenario, okay. So okay, let's move on. And here we had in sight a possible double bottom, and we had this breach, which can be a fake bear break. Just a second, please. Sorry, let's go. So we had this double bottom scenario that we had the breach, and the double here faded. And so far, on this structure here, this impulsive sell maybe will give us another bounce. Okay, so something like this, just make it visible. You see, this move right here was more than 100% retrace, which is bad news. It's like a call for the bears, okay? And I'm going to show you why. Can you see? We went below the 100. Okay, so just another thing that I forgot to show you that is very relevant here. The volume. Okay, so take a look on this. Since the first days, the volume was we had low volume, and since then the volume is increasing, but price is not catching up, right? And you say, okay, but because the bears are in control. True, but we can see as well the bulls activity. Can you see? This guy here was the Ripple partnership, and since then we are having much more bulls activity. They are showing up, they are buying, and this is a great sign. This chart also is very similar with XRP behavior in volume, because we are making new lows. We are close to the end of the pattern, and we are having raging volume as well. So it's very significant, and watch out. Okay, back to the weekly. We don't have any more clues here for now, despite the 100 plus retracement, which is bad news. Here we had this bearish structure that broke bearish, and this guy here, it's our Ripple partnership activity. Okay, so let's keep going to the 3 days. We catch the gap, so it's not a big deal, but it's the only thing we have here right now. This kind of move here, not interesting for us in a bullish perspective. Just a second, please. Sorry, let's go. And not much to see here. Okay, maybe let me see. Okay, maybe on the daily. Let's jump to the daily. Okay. We have this. We had okay, so this guy here, so this is like descending triangle with a broken floor. It can also be it's not a falling wedge, but it is a falling pattern, like a tactical retreat, and it's good news for the bulls. Okay, not the worst scenario. And if we draw here, like a descending channel, another falling pattern, which is not bad. And another thing that we have here, we had our first, our second, our third, and we are going for our fourth wave inside this bigger structure, which are giving odds for maybe another low that can be, I'm not saying it's going to be, a new low, but it is possible to see because we have a falling pattern, and all the falling patterns will give us lower lows, like for example, let me make a draw here. So falling patterns, falling wedge, can you see we have new lows, and for the side B, rising wedges give us highs, higher highs. Okay, so it's very significant, let's watch out. It's also true, so this move right here, right now, if we take a closer look here, we had this double bottom. It's very significant, but the only problem, they are too close. It would be better if it was like this, a bit far away from each other. Okay, but not a problem. Let's watch how it will play out. It's the triple bottom patterns are somewhat rare. Okay, they don't happen often. So and I really don't like flat bottoms or flat tops. Okay, because it gives odds for the bears to keep in control. So let's take another look on this structure here. We can also measure, take measures here. It's like a bearish megaphone, which is expanding inside this range, and we have oh, another thing. Diagonal lines like this one, and also trend lines, log lines, or just a straight trend line, they don't act as support or resistance. Okay, this guy here is not a resistance because of the line, and also this one here, if it was the case, it's not going to be a resistance because the line. Okay, the key thing here to understand this, it's this. Let's say this is a resistance and this is another resistance. Okay, so when price, let's say we have a rising wedge here. Okay, so what price do? Let's say we go here, then bang bang bang, and then here again, and then bang, and then goes. Okay, so the major factor here, the lines, they are crossing resistance and supports all the time. That's why we have this kind of behavior. And the pattern, and people who trade patterns and fractals, we use such levels, okay, to measure, to take the measure from the pattern, and not only addressing the whole line. Okay, so have this in mind. And in this scenario here, we may end up with this kind of move, and then we go back. Probably the buyers will find value here, which will give us the triple bottom, but like I said, we also give odds for later bearish continuation. Okay, which give us this scenario here, and then we pierce the floor. So it's not the best scenario. That's not what the bulls are looking for. We are looking for bullish continuation, but we need a clear structure for long positions here. Okay, so we don't have it now. We don't have it now, but we may have it soon. Sorry, just a second. So we have not a bearish divergence, but the buyers faded along the way. And yes, we don't have anything at all here. Indeed, we have yeah, no, not a bearish divergence, but also it's not clear from both sides. Okay, so let's move on. Okay, so again, just 1 second, please. Okay, let's go. So again, we made the point here on the golden, which the moving the average price is triggered. Is good news. But the only bad news we have here is this kind of move, that is that the nature of this move here is corrective, not bullish. Okay, I'm going to show you a better example. So have this scenario here as A, or B, that stands for bear, and let's have this one here as A, that stands for the bulls. Okay, so what a bullish move on this scenario here would look like. We had the sell and we had the double bottom. Okay, the bulls would be looking for a move like this, and then make a higher high compared to the previous one, and then we will look for a retrace, a healthy retrace before going up. But here, what we have here is this. We have our sell, and now we are grinding slowly. Can you see how it looks like a bear flag? Of course, bear flags in bottom structures are very dangerous, okay? Because people would be shorting key support levels, okay? So this kind of move always end in continuation, bearish continuation, okay? So this scenario here, it's possible to see a move like this. I'm not saying it's likely, but again, watch out for people calling for this is it, it's moon, bull break, we're going to Lambos and etc. Okay, watch out, the numbers doesn't fit so far. So we have the next level trigger, that's the price average, and it's not a great scenario. And also the thing I talked about, the Dow Jones correlation, inverted correlation, we have to watch out, okay, because we know that in the bigger picture we have a 65 retracement. Okay, so like it's not clear for us, the bulls, and also not clear for the bears, okay, because their odds here, just a quick example, let's say for example they are shorting this scenario here, okay. So if we are going for 116 again, and presuming we are not going higher than 2.14, they have good odds, but presuming, okay. But it's a dangerous trade, they know their odds are not the best, because this, like I said, this move here, it's not clear for how long we will keep going up. Okay, so we are going to have action here. Okay, bulls will be bears, sorry, will be waiting here for sure. And the trick thing is, once 50 is triggered, we have confluence for 61. So the late bulls will be looking for this level, and the bears will be trapped here. Sometimes we see price behavior like this. For example, we are going to see price breaching a specific key level, and then right after we are going to see the empty candle all the way rejected. Okay, because the bears know that once the confluence is triggered, what they have to look for next is the 50. Okay, so just a quick info about how this can play out. Okay, how you can protect yourself. And now let's take a quick look on the 1 hour. Okay, so here we have okay, here we have better info. Okay, that we have to look out on how this continuation here will behave, and how a move here will change the other charts. Okay, so this is our previous lower high. This is our previous lower high as well, that was already beaten. Just 1 second, please. Okay, let's go. So we had this potential inverted head and shoulders, and maybe a fake out or a little breach here. We have to watch out here as well. And so what the bulls need now? What would be the best scenario here? Instead of going up like this, we should go up like this. Beat the first guy and then make our retrace. Okay, so it could be to this level here, could also be for this one, it doesn't matter. A retrace around this level here would be a 61 to the golden, which is a bullish characteristic for pullbacks in a bull market. Okay, so this impulsive move here would change any bear bias that we may possibly have now. Okay, and I'm going to give you another perspective here as well. Can you see? I will make a better draw. Oh, sorry. Okay, this is our guy. So we know that inverted head and shoulders is a bottom reversal pattern, right? So fact check for the bulls. Make a better draw with a clear neckline. Another thing about patterns, if the pattern is not 100% clear, is not valid, okay, or somewhat close to 100%, because what some people do is like this, and they will call this a neckline, and this is not valid. Okay, also the target for a trade like this is not valid as well, so have this in mind. and then we had this fake out here, or because every time a head and shoulders or an inverted head and shoulders broke bearish or bullish. Just a second, please. Sorry, let's go. So every time we have a breach, we end up with a retest. Okay, and this one was more aggressive. Okay, I am 100% sure that we had some longs here because the chart is inverted, and this was a trap to catch all these positions before continuing. Okay, so let's go back. So guys, this is what we have for now. We have like a 50% good news and 50% bearish news, but the bears are not like 100% in control like they were before. Okay, so all this behavior, this price behavior, it's related to 1 hour chart. Have this in mind, and this is somewhat for a short time frame perspective. Okay, which means any kind of analysis in 1 hour chart will short live. Okay, remember this, and watch out for the bigger picture or bigger scenario that's going to dictate the rules for the days to come. So guys, just another thing here for the long-term perspective. Let me see. Okay, our higher high was 296, and our trigger level is at. Okay, so for a bull run in the coming years, we can expect a new high around this level here. Okay, so this will be the first target for a bull run. 377. Okay. So I hope this info helped you. I hope it can improve your analysis or your trading setup or your market perspective, the way how we look at it and how we understand the nature of the price behavior, price action, people behavior, market behavior, how to measure, and etc. Don't forget to like, share with your friends, subscribe. I help you and you help me. We exchange. Okay? So for now, this is it. I hope you guys like it. Let me know if you have any questions. You can ask me here or on Twitter as well. And I think this is it for now. Thank you guys for your time. Thank you for your patience. And I will see you guys soon.